Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, April 10th, 2008. Well, today we saw what could be the start of the rally that we've been talking about, and we're going to have to monitor it because Rome wasn't built in one day, as the analogy goes. And it wasn't like a tremendous up day. We closed nicely up on the day with the Nasdaq closing up 29, almost 30 points, the Dow closing up 54, almost 55 points, and the S&P up about 6 points, which is a nice day, no doubt about it, especially coming off of a generally a pretty hard sell yesterday. But the key here is, folks, is how do we recognize whether this is the start of a rally or this was just an up day before maybe another fluctuation day or pause day. And then that's where we sit right here. We know the rally's coming as we've been pounding the table. The question is, going into options X, going into tomorrow being Friday, where will the market go? Oftentimes Friday, especially Friday afternoons, you have pause days. However, off of a nice day like this today, it would not shock us if we start to inch up in this market, especially off the key technical patterns in the market. So let's get started right into it here. And I want to touch on the daily intraday charts obviously first, and then we'll go to the daily and analyze those. You can see here that we were fluctuating early on, and this is basically 5 in the morning and the futures are trading, and we're basically sitting flat to slightly negative in the markets. And what we did see is the market start to inch higher, especially right on the open. Here we had a little bit of a final sell-off, maybe scaring a few shorts, and then look at this bottoming tail right here. You had a nice little tail down here, and then the market was off to the races, and you had a tremendous push up, which basically caused us to stay in the market to the upside the rest of the day. We did make an attempt late in the day to come back and pull back as the market sold off, but for the most part we stayed in the positive side of things. And I want to show you this trend line, guys. Let's just look at this one right here, and this is what all needs to be said. Look at that trend line formation. So you got to take the top of that high right there, and you bring it right in here and right across, and there it is. Now the key is here is this is setting up for another breakout. Obviously the market closed too soon to really get that to come through, but in any case, this does make it look like there's another move up coming. Whether or not it comes tomorrow or waits till next week, options X, when the week is going to be absolutely out of control. Obviously, we always talk about the Wednesday of options expiration being, we coined the term whipsaw Wednesday because the volatility there is just insane, and that'll go on mostly all of next week. Now, the intraday pattern, as I said, was pretty much that. Is you had a hard push early. We basically had consolidation here most of the day, and even the rest of the day. You did have a couple hard sell candles here as late in the day, but they did recover. You see the bottoming tail right in here late in the day. That triggered another buy program to come in as we basically closed the day right on that 20 moving average. But aside from that, you can see it's just, this is what you call consolidation. And this is what we're looking at in the market. This is the same pattern. These patterns repeat. So if you guys can learn these patterns, you're going to be able to pick out winning stocks, winning trades by patterns. And you guys hear me talk about pattern, price, and time as being the key components. All these other junk, technical analysis tools, everyone knows them. Everyone knows how to read stochastics. Everyone knows MACD. You need, when watching these videos, and the way we do it is we find the things that people don't know how to do, like reading price, time, and pattern, and volume, and level 2, and all this kind of stuff. You can read those, which not a lot of other people can read. That's when you get the leg up. And that's what we teach in the webinar, by the way. Next Wednesday, Thursday night, we're going to go over a bunch of this stuff. We're going to go over some of our proprietary techniques, obviously. We can't divulge everything, but you come to us on a one-on-one session, we can talk about it. Obviously, institutions, we're always out there to consult with you. Hedge funds as well, as we have had some hedge funds talking to us recently because of their performance over the last few months, and they've seen the record that we've been posting here on our market calls and are actually looking into some good consulting, and we do appreciate that. We always welcome that. But in any case, obviously, come join the Swing Trade Alerts and the chat room. The chat room is phenomenal because we constantly teach throughout it. We teach the same things. We talk about the patterns in different stocks. We talk about the market patterns, breakouts, breakdowns, supports, resistance, and it's just constantly drilling it into those people's minds because we constantly talk about it in the chat room. Not only do we trade, but we also talk technicals. We give one-on-one, minute-by-minute analysis of the market as it plays out all day. Now, let's go to the daily chart because obviously we saw this push up and the consolidation. I want to show you how this pattern is the same type of pattern that's playing out now in the markets. There you go. You had the push, and now you have the sideways trading pattern. So basically, it's the same type of thing. Look at this. So here's the push up, and then the sideways to the lower trading range. And now we did get that rally today, or at least start, and look at how that's the same. It's the same. Push, sideways, setting up for another possible move up. Okay? Now, again, the question will be, where do we stand? Because Friday is a weird day. Friday, a lot of times, light volume, especially on a day like this. It's so beautiful in New York today. Probably 65 degrees, 70 degrees outside, sunny. And we did see volume lighten up in the afternoon. And who knows if traders took off early to go enjoy a round of golf this afternoon or not. But volume lightened up this afternoon. It was actually pretty good this morning, but volume definitely lightened up. So let's go to the SPY to really look at the daily. And you can see the same pattern here, guys. Remember the necktie. Necktie being the touching of two moving averages coming together underneath a chart or above a chart. Above a position or a stock price would be resistance, below is support. And you're seeing that form right here. The 20 and the 50 coming together. They're just about together. You have the stock price having come down right above it yesterday. And today the low basically right there as well. And we did push up off that low. So we're going to now watch. Do we take a blast off like this? Or do we have another side day? It's a slightly down day, which is very possible. Or a sideways trading pattern and maybe a slight move up tomorrow as well. Just still making this sideways pattern. Just because we had an update today, yes, we've been calling for the rally, and many people probably said, well, here it is, in the money was right again, but we actually were expecting more than this. So yes, we were expecting this after the consolidation right down into the necktie, but we still want to see more consolidation or a blast off. We want to see 2, 3, 4 days like this. I want to see the Nasdaq up 20 days, 3 or 4 days straight, 20 points, 3 or 4 days straight, excuse me. And that'll signal that we're having that full-fledged rally. And ultimately, we're looking at a possible move as high as here. I know that sounds pretty crazy, but it's very possible at the end of when it's all said and done, that may be true. But we'll have to analyze the charts. This can all change by tomorrow. We could get an ugly candle tomorrow that reshapes our whole view, and that's why we follow the charts. And that's why, as traders, and this is key, guys, as traders, we don't care what the market does. As long as we can read it the day before or a minute before it happens, that's fine. The markets want to sell tomorrow, you know what? We'll read that right away as soon as possible and go short. If the markets want to rally, then we're right on board on the long side. And as long as we can analyze these charts, and you guys know that quickly enough we've been able to call. We saw this topping tail here a few days ago and called the little push down prior to this move up was coming, and sure enough it did. And as traders, you can sometimes position yourselves, and that's what you want to do. And even if you don't, you just want to notice the trend, and this is what you want to talk about. After this mega push up, you knew you were going to get consolidation, so that's where you want to exit. You want to exit right here, and then just let the market settle down. Then you go long again right here above the necktie, and hopefully get that blast up we've been talking about. This way you capture this portion of the market again, even though you made it already on the upside, because you're selling up here, you're rebuying here, and you're getting the spread right here when the market moves again. And as traders, that allows you to do it. And that's one way of avoiding the little tiny moves. Yes, we called a few down days there in a row, which we knew was going to come, but who cares? If you're one of those guys that has a job all day, or women that has a job all day, you can't obviously pay attention to every single move in the market. You just want to know generally the trend, and this allows you to do it by following price, pattern, and time. So again, keep that in mind. Now let's look at the Nasdaq chart. Flip over to the Nasdaq. The Nasdaq had a nice move, and the Nasdaq has a necktie now. This is an official necktie. The 20 and the 50 touching right here. The market right above it, and that's good support. I mean, you're looking at a support area that's known for being some of the strongest. The only thing that would make this stronger is if it was the 200 moving average and the 50 instead of the 20 and the 50. But the 200's up here. Obviously, since the market has sold off so hard, the 200 is above the market at this stage of the game, and we'll see if we rally to there. All right. In the very least, the first area of movement in this market will be probably right in this area. You really want to you're going to have to take out the highs first. So this will be the first resistance point, but it'll be a minor resistance area. You blow through that, it's off to the races, and then we'll start analyzing the markets to see where the next area will be. It may be up in this area, looking at a top right here as a near-term resistance area again, and then we'll have to notice the next layers of resistance as we go. Now, we always like to look on the downside because this is not a perfect science. Yes, we've been, our percentage of winners is phenomenal when we talk about the market and where it's going each day, and I can appreciate that, and I appreciate the emails we've gotten congratulating us. But we're not going to be right all the time. Yes, we're right most of the time, but on the downside, you just want to watch for resistance support breaks, really support breaks right here. You break below the necktie, then we reevaluate and see if we're going to go lower first before we go higher. Because anything can happen at any time, and that's important for us all as traders to realize. And that's why you never want to go all in. I always, as a trader, I'm always sitting as a partial cash position. I don't care if I'm bullish or bearish or which way I'm sitting. I still have a little cash on the side. I'm never fully invested in the way I want, and I always keep stops. That's so important, folks. You keep a stop, it saves you from the big loss that can wipe out a year of gains. All right, there are stocks that I've been wrong on before, and they've gone down, but you keep a tight stop. You have one loser out of 10 or whatnot, you're going to be fine to go, and that's fine. All right, guys, so that's what we're looking at here. Let's quickly flip over to a couple of these positions. Google, Baidu, Apple, RIM, all strong today. Remember, we called the area of resistance right here where it pierced the 50 moving average on Google. You had a little pullback right around to that 20. Now you're seeing a little move up. If Google can break this 50 moving average to the upside, you should get a nice pop higher on Google. Apple needed to consolidate, no doubt about it. It had a huge move up here, even breaking the 200. Then it's pulling back right into that 200 moving average and it's trying to hold support. If that doesn't hold, look at the 20 moving average a little bit below. That should be very, very good support. Other than that, folks, all I can say is let's see where this Friday takes us. It could be more of a push higher, but it could also be a pause day again as we're setting up for options expiration, which is going to be wild. We always talk about it as Whipsaw Wednesday and Crazy Tuesday and all this stuff as they try to go the opposite way of the crowd. Come join the chat room, swing trade alerts, options alerts, consulting. Have a wonderful day, folks.